The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the March edition of Digging into the BI. This is where the members from the DC and Maryland chapter get together and look at the latest issue of Better Investing. Cheryl, I'm looking like I just see the slide master and not in presentation mode. So it's showing up with slide 22 rather than the overall screen. Is that what others are seeing?
Sorry about that.
Yes, I'm
also seeing the slide deck.
Yeah.
27 highlighted.
So as I said in the chat window, folks, yeah, we're having some technical problems. It's apparently just not our week.
Has it changed now?
No.
I still see it starting on slide 22.
Maybe try stop sharing and then share again.
All right. Get out of this other stuff.
While we're doing this, we'll go over some of the other stuff to keep things moving here. Is that,
all right.
Let's see what we got. If you can't tell, folks, we are volunteers. We're not professionals.
Try canceling that out. I'm gonna try changing presenters real quick.
Cheryl, I've got the slide deck up if you want to make me presenter.
Yeah,
okay.
Let's do that.
All righty.
Here we go.
Yep.
Okay.
Okay, there we go. And all right. Now, can everybody see my screen?
Yes.
Yes.
There we go.
Okay,
oh,
Kevin, you're up.
There we go. Good evening, everyone, and welcome to the March 6th edition of Digging into the BI, where the members from the Maryland chapter and the DC regional chapter, and even someone from Alabama is here to help us out. And so here are the four stocks we're going to be looking at: RH, Fox Factory, FedEx, and Tecnoglass. And we have three really great presenters helping us out tonight, so thank you to all, and you'll hear from them very shortly. Let's go to our next slide. And so here's our standard disclaimer. We are doing this as for educational purposes only. We believe that you should do your own research. Any stocks or securities or places, websites that we go to is not an endorsement by any of the presenters or by Better Investing. And we always believe that you should do your own research before doing this. This will be recorded and put up on our YouTube channel at Digging into BI that you'll be able to see maybe later on tonight or tomorrow morning. Let's go to our next slide. And so most of you I see in the audience are Better Investors, but again, this is going out to people that aren't in Better Investing. So if you want to know who we are an investment education organization, and you'll see that hyperlink down on line where one is. You can go there and find out a little bit more about us. And then our approach to investing is on line 2. We're long-term fundamental investors. And like I said, all of us are volunteers from Mid-Atlantic or from Alabama. Anyway, next slide, please. And so again, as we said before, investment education is learned by doing is our approach. And there are two of the people that were there at the beginning, George Nicholson and Tom O'Hara. And we're just sort of following in their footsteps. And we're going to do that tonight, and you'll be able to see it in action. Next slide. So as I said before, we will be recording this, and here's our YouTube channel at Digging Into BI. You can go there, or you can just go to YouTube and in that green where that I've highlighted in green, you can type in Digging Into BI and you will find us. We have 79 subscribers. We'd like to see if we can get up over 100. When you're there, go ahead and like the video and share it or subscribe. All of those things will help improve the algorithm that helps people find us, because we've set up things for non-BI members to find us as well. And all of the webinars are organized by what are called chapters, which is you can just advance to the stock or stocks you want to listen to by looking down in the comment section where they begin, and you can advance right to that area. Next slide. And this is sort of our standard how to get through. Go to webinar over on the right-hand side, and sort of the grayish black is sort of your control panel. You can be able to move that out with the arrow. You can move it up and down where I have the green circles to get it out of your way. If you want to type in any questions, we will be looking at those things tonight. You can be able to put in questions, and when we get to question time, we will take those. And we will have you muted until question time. Next slide. And if you need more help in terms of connection, like we were having our own audio problems here, you can be able to look at the globe for that. If you're on your computer, you should be on computer audio. And this is the slide, again, slide 7, where you can get the handouts for the completed SSGs as well as this slide deck for tonight. And so go ahead and make sure to go over to the handouts and download all of those right now. Next slide. And if you want to be able to make things better for your viewing experience, up in the top where it's one with Zoom, you can be able to click on that and you get a drop-down window, and you can make that an entire screen or any other size you want to. There's also a plus minus over on the right-hand side that you can make it even bigger. And if you want to, you can also screenshot things that will probably default to your desktop. But it depends on how you've had that configured on your own computer. Next slide. So why are we doing this? Well, we want to be able to show how better investing works for both new members and for people that are prospective members. If you're more veteran, and I see we have some of those in the audience tonight, that's okay too. We're just trying to show the best practices of using the SSG, and sometimes we talk about the PERT report. And this is a joint program from, like I said, the 2 chapters, the Maryland and the DC regional. And we have 3 model clubs, and we're going to be able to promote, we also promote our Visit a Club program. And it's also to be part of the Mid-Atlantic community, but you don't have to be in Maryland, DC, or Virginia to be a part of it. We're glad to have you. Thank you. Next slide. So in just over an hour, we're going to go through 4 presentations. We'll look at the monthly stock to study and the monthly undervalued feature. And then we have 2 more stocks. In this case, they were found from Ticker Talk and the Ticker Heat Map, but they can come from any of those other choices down there. But basically, we want people to show all the information that you can find just from your BI membership. Not that the other places aren't good, and we use those for resources, but there's a lot of resources that are not being used inside your membership that we want to show you. Next slide. So tonight we're going to be looking at RH Inc. as well as FedEx. And you can be able to find this. You don't even have to be a member if you go to Home About Us at Better Investing. And up on the top in the banner is the URL, so you can find us there as well. But so these were announced on January 10th, and that's sort of normal, somewhere between 6-7 weeks from when they were announced to when it comes to that issue. And you can be able to see even the ones coming up for the next couple months. So that's it. Next slide. And if you want to be able to get more on future announcements, if you are a member, you can go under My Account where I have the red circle or the red underline, Home My Account, and underneath email and product subscription, you can be able to click on that and you can be able to sign up for the local news where I have the arrow pointing, and whatever your local chapter is, you'll get there. But before you hit that Save Changes, I like to go over where that yellow highlight is in the BI Weekly newsletter. And if we go to our next slide, we'll show you what that looks like. And this is it. This is for members only. And they do have some really interesting things like next week, or I should say later on this week, they're going to have a sneak peek at the top 100 stocks. It's an annual feature of the April edition. So you can be able to see some of the things there. And there's a really interesting screen for small and medium-sized growth companies. Both of those look really kind of intriguing. So all of us are always looking for small and medium-sized companies, and that may be a good place to find it. This comes out usually to close of business on Thursday. And if you signed up and you're not getting it, check your spam filter. Next slide.
Sorry, no, I'm freezing up here.
Oh boy,
Okay,
everyone's
click
having.
once on the screen slide and then try doing your down arrow. Here you go.
Thank you.
All right, and we're also on Facebook, and you can find us either in the Maryland chapter or in the DC regional chapter. And again, these can be shared with members and non-members alike. I've been putting stuff up there, and I've been seeing that there are people in our community across the country that are sharing that with other people. Thank you. So if you have come from outside of Maryland, DC, or Virginia, and you found it that way, great. Glad to hear about it. Go ahead and put that in the, put us something in the chat box so we'll know that you got it from there. Anyway, next slide. And Jonathan, tell us what's going on with the Maryland chapter.
Okay, the Maryland chapter, we have our stock pickers contest that is ongoing, and you can see the results on the right. Bright Ideas is doing fantastic for so far as the current leader, and that will end August 26th of this year. So we'll keep updating that list going forward. And then we have an in-person SSG class that will begin April 13th. So there's still time to enroll in that. Just go to our website and click on the registration button if you're interested. And that's going to be held at the College of Southern Maryland in Prince Frederick campus in Prince Frederick, Maryland. Thanks.
Thank you, Jonathan. Next slide. Cheryl, tell us about the book club.
Money Matters Book Discussion is a monthly webinar that we have from the DC chapter. And the next book that is going to be done on March the 21st is Money Magic, An Economist's Secrets to More Money by Lawrence Kodikoff. And I'm sorry if I butchered his last name. It starts at 7:30. It's the third Tuesday of every month, and to about 9 o'clock. And it's free, open to anyone. And so please give us a try.
Okay, let's go to our next slide.
Okay,
John.
so we're still making some adjustments to our up and coming renewed model club. So again, stay tuned. You can click on our website link and find more information regarding the model club, but we'll keep everyone up to date when we get started. Thanks.
Okay, very good. Let's go to our next slide. Armida, tell us about your club. Armida, you need to unmute yourself.
Thank you. We're Pinnacle Group Investments. We've been together since 1996, and right now we're currently at 9 partners. We're meeting this coming Saturday morning at 10 a.m. And we're a ragtag bunch of people looking to learn how to invest. In this particular month, we're looking at evaluating company quality, and one of our members is going to be doing a study on Fidelity D&D Bank.
Very good. And let's go to our next slide. And
Yes,
Marilyn.
hello, it's Mary Hardesty, and We are a group that began in 2017, 8 partners, and I'm inviting all of you listening tonight to please join us on March 15th, third Wednesday of this month, for our business meeting. We are online from 7 to 9, and our education for the evening is using the first cut reports, and our stock study is Tecnoglass. So all are welcome. We hope you'll join us.
Thank you. And let's go to our next slide. And Bhaskar, tell us about your club.
So good evening, everyone. This is Model Investment Club of Northern Virginia, McNova. This was originally started in 2008, and we have about 12 partners. We usually meet on the second Tuesday of the month, and we used to meet at the Tyson's Plymouth Library in Falls Church, Virginia. But due to after the pandemic, we have been full-time on the go-to meeting. So this month we have an education segment, Back to the Basics with SSG, and a new stock to study, Cavco Industries, CVCO. All are welcome. It is between 7 to 9 p.m. Thank you.
Thank you. Okay. Next slide.
All right, we've got two parts to this. One, promote, visit a club. The clubs that are listed for both the Maryland chapter and the DC regional chapter are looking for members. So if you're looking for a club to join, and you can pick the one chapter that you belong to and look in on any of these clubs and see which might be a best fit for you. The other half of this is chapter directors from both the Maryland chapter and the DC regional chapter will come and visit your club either in person or virtually. And there are many perks to having a director come and visit your club. One of which is that maybe we can help you with some things that you had some questions about, or show you what's new on the website. So the options are open as to what you need or what you would like us to answer for you. And we hope that you will contact us at any of the directors on the contact information and tell us what your name of your club and when you would like a visit.
Very good. Thank you. Let's go to our next slide. And since this is digging into the BI, we might as well look at some of the articles that are in the magazine. Over on the left is you can look at this on an app, either on your tablet or your smartphone, any other electronic devices, or you can also be on an e-magazine, which is over on the right. I know most of us still like to get the thing in paper in the mail, but there are other ways to get it as well. These come out earlier, so you can look at them sooner. And let's look at one of the articles from there. Let's go to our next slide. And before we do that, this is when we talk about the stock to study and undervalued feature, there's additional resources that are part of it. And you see where that red arrow is, the analyst reports and other resources on the left. That's where you can find that stuff that's in the stock to study and undervalued feature. If you do need to be able to sign up for the Better Investing mobile devices, you go where the green arrow is, and it's a different user, it's a different password than what you would have on your normal account that you use for the online tools. And it's pretty straightforward. You can walk through that, but that's where you'll be able to find the additional resources. Let's go to our next slide. And again, there's a new layout to the BI magazine, and this time I'm looking at sort of the book value column. I found this really kind of interesting. Angela McQuaid, who's a Maryland resident, she has been writing this column for 20 years or so, but this was one on how to be able to help with introducing money matters to kids, and it's illustrated. And she says the number one question that she gets, Angel does, as a columnist is what kind of books are best for me to show kids or grandkids about it. And so Make Your Own Money, How Kids Can Earn It and Save It and Dream Big by Ty Allen Jackson is something that she heartily recommends. So if you're looking at that for your kids or grandkids, look at that book. Anyway, next slide. And one of the things you're going to see in some of our slide decks here is that just like they changed the outlook, the layout of the magazine, they've now just changed the layout for the online tools. This was notified to all chapter volunteers on Friday. So my guess is a future BI weekly, or they may even do a webinar that sort of shows you some of the new look to the online tools. And some of our slide decks will have the changes and some will not. But going forward, they'll start looking more and more like that. So be on the lookout for it. Next slide. And we do have the investor education column. There's always some interesting things going on there. And there is the stuff for the Money Matter Book Club and Maryland's in-person stock analysis class. But there's also things that we in Maryland, DC, and Virginia can watch just from being on the online. One is from South Florida. If we can move that to the back and have the slide presentation come to the front, that would help. There we go. Thank you. So the South Florida chapter is having a portfolio review and the like on March 25th. Cost a nominal cost of $20. And then the Northeast Ohio is doing some stuff, a couple different series that start on April 1st. Go ahead and look at your magazine, dig into the BI, go to page 51, and there are links for how to do it. Or if you do this electronically, you'll be able to do it right directly from your tablet or your computer when you open up the e-magazine. Next slide. So here are the first of the 4 presentations we're going to do. It's going to be RH Inc. by Jonathan, followed by Fox Factory Holding Corporation by Armida. And let's just go straight to the next slide and have Jonathan take it over.
Okay, thank you, Kevin. Let's go to the next slide, please. So RH is featured as the stock to study in the current edition of the Better Investing magazine. Next slide, please. So RH is a medium-sized company. It's in the consumer cyclical sector. And this is a furniture store. It's a furniture store that's focused on luxury brands. And their goal is to become the authority in taste and luxury for the home, which they have actually shown to be extremely lucrative and very disruptive to the industry. Next slide. So Restoration Hardware opened their doors in 1981. They became a publicly traded company in 1998. During the Great Recession, they were teetering on bankruptcy and they were acquired by a private equity firm. And then once they had become profitable again, they started publicly trading in 2012 and renamed the organization RH. That photo is actually a picture of the original owner in one of the first stores in California. Next slide. So RH has over 100 brick and mortar stores. Their design galleries, or the different galleries that they currently have, they have 67. The majority of those are actually in shopping malls. And what RH wants to be, they want to be recognized as the leader of the luxury home industry. And one of the ways they're going to do this is by revamping or modifying or redesigning a lot of their furniture gallery stores so that they can bring more of an immersive experience to their customers. Next slide. This is their online portal, their website, and they call it the World of RH. And it's really elegantly designed. When you go to the website, this is one of the pages And it really breaks down a lot of their products and their services. And I'm going to talk about a few of those coming up. Next slide. So restaurants aren't a new idea for stores. When you think of IKEA, Neiman Marcus, Nordstrom, many of these stores have restaurants, but none of them are outfitted as lavishly as RH. You can look at the picture on the right. That is a picture of one of their restaurants. And then once you have completed your meal, you will exit through the showroom. So RH has actually opened 15 of these restaurants across the United States and Canada. Most of them are actually connected to stores, and each of the restaurants are earning about $10 million annually. And management basically says that these restaurants are not just designed to draw in shoppers. These are central to the goal of promoting RH's luxury brand. Next slide. RH Guest House is basically an elegantly furnished hotel. This is their hotel in New York. This is one of the first guest houses that they've actually constructed. And it looks like a high-end art museum on the inside, and that's the rooftop pool. Next slide. So RH, the goal for the RH spaces is they want to create a new market with immersive experiences for travelers that are seeking privacy and luxury. So you can actually charter their jets, RH1 and RH2, and their yacht, RH3. Next slide. They have over 400,000 customers that are enrolled in their members program, paying $175 annually. This is approaching almost $100 million in revenue. So the members program provides discounted products, complimentary services, special financing. Next slide. Now these next three slides are really very important and it really describes RH's vision, their long-term key strategies. One of the first things that they're looking at is product elevation. They want to build the most comprehensive collection of luxury home furnishings in the world. They just recently acquired two companies and they rebranded them, RH Couture Upholstery and RH Bespoke Furniture. These are basically tailor-made and custom-made upholstery and furniture. RH Color is similar to Benjamin Moore and Sherwin-Williams. So if you're redesigning a room in your home, the consultation may also include a different color pattern to the room. So you can go through the RH Color consultation. Gallery transformation includes, they want to open up the new design galleries in every major market, and they want to incorporate their hospitality services within these design galleries. Next slide. They want to move away from just selling products, just selling furniture. And what they want to do is develop this or conceptualizing and selling spaces. And by doing that, they want to build this ecosystem that includes their products, places, services, and spaces, and incorporate their hospitality services. The digital reimagination is basically their online portal or their website, The World of RH. Next slide. They're expanding internationally. They've actually cited several locations in Europe. So over the next couple of years, they're going to be opening new locations in Europe. They're getting into the housing market with fully furnished luxury homes, condominiums, and apartments with integrated services. Next slide. This is a cyclical company, so keep that in mind. So it's very sensitive to the economic conditions, the recession, inflation. There's a lot of talk currently, and that's really affecting RH's fundamentals at this point. The furniture retail market is very, very competitive. So it's very easy for customers to decide to switch to a different vendor. Next slide.
5 minutes, Jonathan.
Okay, thanks. So sales and earnings are increasing. You see that earnings are increasing a little more than, well, quite a bit more than sales. But the last 3 quarters, you're noticing that there's a downtrend. So I take that in consideration when I'm looking at my future sales and earnings forecast. Next slide. So historical sales growth. Now I want to point out their competitors. Williams and Sonoma is probably the closest competitor to RH. Wayfair is a large size company, and our house is a very small company. Wayfair is actually 100% online company that sells high-end furniture and high-end products to more discounted products too. But RH sales have been fantastic for a medium-sized company. They're growing sales at almost 9%. Next slide. Similar, the earnings are growing phenomenally at almost 38%. And this is definitely better than the industry and the peer group and better than Williams Sonoma. Next slide. This is management scorecard. So the first spreadsheet at the top, profit margins. Profit margins have actually done quite well. If you look between actually 2016 through 2021, profit margins have been progressively increasing, averaging over the last 5 years at 10.8%. And this is better than the industry averages and peer group averages and some of the direct competitors. Return on equity at the bottom has been fantastic, almost 43%. And this is better than all of the direct peers in the industry and peer group averages. Next slide. Now, RH has over $2 billion in cash on their balance sheet. They carry a high debt. It's not unusual for the industry. And actually, if you look at their debt from 2017 through 2021, it's actually decreasing, and which is fantastic. So overall, I think management is doing a great job running the company. Next slide. My spreadsheet is at the top, and I circled in red sales and earnings. And if you look at the far left, the benchmark SSG 5-year average historical growth rate for sales and earnings is 52%. It's quite high. And if you notice that the analysts going forward are anticipating earnings to slow significantly. So I take that into consideration. I'm using 7% sales and earnings growth, forecasted growth. And these calculate to 5-year projected sales and earnings that are very comparable to what the analysts are anticipating in the future. Next slide. The analysts also give us information on the future high price. So the high price is ranging between $290 and $581 per share, with an average of $419 a share. And I'm also noticing, if you look at the middle spreadsheet, the high PE, at least for the last couple of years, 2020 and 2021, there's a downward trend. So I'm looking at the trends of the PEs, and I have decided to select a lower high PE, and I'm using 21 as my forecasted high PE. And this calculates to a high stock price of $499.50. Next slide.
Two minutes, Jonathan.
Okay, thanks. My low stock price forecast is $232, and this represents about 20% below the closing price of $293. Next slide. So if we were to purchase this stock at the current price, this would give us about 11.2% return. Next slide. So the management has a bold vision. They are highly focused on maintaining this luxury brand image, and they're targeting high net worth individuals who are at the highest levels of wealth and income. This is from their website. Our ecosystem of products, places, services, and spaces inspires customers to dream, design, dine, travel, and live in a world thoughtfully curated by RH, creating an emotional connection unlike any other brand in the world. Almost has a Disney feel to it. Next slide. So RH is a medium-sized, moderate growing company, and I think it's very well managed. At this point, I would really sit on the sideline. I think this is a great company. It's got a wonderful vision and outlook of what it wants to grow this company to be. But I would sit on the sidelines. Now, being a cyclical company, and keep this in mind, it is a cyclical company, and you have to analyze cyclical companies a little bit differently too. Sit on the sideline, watch this company for a couple of quarters. They have a new earnings report coming out, I think at the end of March, and just see if management is really going to come through at least early enough on some of their promises that they're forecasting for the future. Thank you.
Thank you, Jonathan. And let's go to our next slide. And we're ready to hear from Armida about Fox Factory. So take it away, Armida.
Good evening. I'm going to be talking to you about Fox Factory. I found this particular stock at the Mid-Michigan Manifest Roundtable in August of 2022, and I also found it in the My Stock Prospector quality screen for February of 2023. Next slide, please. In terms of overview for the company, they were founded in 2007 in Duluth, Georgia, and Morningstar places them in the motor vehicle parts industry. The sector is automotive. They have around 4,100 employees, and they are a holding company for Fox Factory Incorporated. As you can see, even though Morningstar places them in the motor vehicle parts industry, Fox Factory doesn't necessarily meet the top stocks in auto parts for manifest investing. But if we'll go to the next slide, we'll see though that they do place in the top stocks in recreational vehicles and in discretionary. They are a consumer cyclical company, which we have to be aware of when we're looking at this particular stock. Next slide. What do? They design, engineer, manufacture, and market products and systems that enhance performance of sports vehicles. They also deliver technologies that support race-proven defining performance. And also what they seek to do is to be a best-in-class brand with deep consumer loyalty, known to produce the best products for professional and non-professional athletes seeking a competitive edge and performance delivery. Next slide. The core of their consumer base consists of professionals, ultra enthusiasts, weekend warriors, and some performance enthusiasts. And their goal is to capture a greater share of the performance enthusiast and general consumer markets. Next slide. This particular company has two lines of business. One is the Specialty Sports Group, the SSG, and the Power Vehicles Group, the PVG Group. Next slide. The Sports Specialty Group has an extensive portfolio of performance-defining products for their Sports Specialty Group, and they market original equipment parts as well as aftermarket parts. Next slide. And they also have their Power Vehicle, next slide. And their Power Vehicle Group products also produces products for an array of different vehicles, like their trucks, SUVs, RVs, off-road vehicles, UTVs, street performance vehicles, defense vehicles, commercial vehicles, and many, many others. Next slide. These are some of the Power Vehicle brand names that they produce products for, as well as names of brands for their aftermarket sales. Next slide. In terms of sales growth, this particular company has provided consistent sales growth fueled by product leadership in new markets. And as you can see, in terms of consolidated sales, they over 28% growth in the 3 years for the compound annual growth. And their growth continues to increase year after year. And their SSG sales growth has been climbing, particularly for their mountain bike products and their product line expansion products. And also the PVG sales has been very strong too in terms of their power off-road vehicles markets. And what this has done is it has truly propelled their sales into high digit growth. And as you can see, in terms of where the sales are coming from, in 2021, the majority of the sales was coming from the PVG group, and with the lesser sales coming from the SSG group. But the goal is to increase the SSG percentage of their sales. Next slide. In terms of profitability, this company has been improving its profitability year over year. As you can see, over the last 3 years, their compound annual growth in terms of profitability has been 28%. And I have numbers here for this third quarter of 2022 compared to 2021, and it's around 21%. And even though I don't have the chart up here, basically they had a very strong finish in terms of the end of 2022, in terms of record growth. And they're expected to do the same in 2023, with its power vehicle sales continuing to demonstrate the strongest performance, but also looking for growth in their specialty group sales despite the current economic conditions. And FOXF definitely had a very strong finish in its fourth quarter. They had another record year in terms of both revenue and earnings, and they think that this has to do with them being able to leverage their diverse portfolio to combat supply chain and labor constraints, which have truly hampered growth in many other companies. Their sales increased 19.4% compared to the same period year over year. And also their adjusted EBITDA was 18.8% of sales compared to 17.8% sales in the same period last fiscal year. And in terms of the fiscal year 2022 results, their sales for the 12 months, they increased 23.4%. And their adjusted EBITDA increased 35% in 2022. And so basically they feel that in terms of a growth strategy, they feel that they still have opportunity in terms of increasing their EBITDA margins in excess of 20% over the next few years. And how they plan to do that is through their power vehicle manufacturing and research and development platforms. They hope to expand here in North America. And also they want to incorporate process-related efficiency initiatives into their systems, as well as optimizing the bike production facility in Taiwan. Next slide.
5 minutes.
Okay. How do they plan to improve this profitability? Well, they feel that they have a very strong cash position and credit facility, as well as in terms of cash management. They've been able to focus on operational and strategic initiatives, which I discussed a little earlier. And also they feel like they've been able to leverage lessons that they learned during the pandemic for their cash management. And the other thing they've been doing is doing a lot of mergers and acquisitions. Next slide. So let's look at management. They seem to be doing pretty well. And so if we look at our pre-tax profit and sales, you can see the trend is up, is increasing. And we would return on equity next up very much in high double digits in terms of percent debt to equity. Except for in 2021, it's been pretty consistent. Next slide. And so where do they see the future growth opportunities? They want to do some market expansion. They want to look at some emerging segments in terms of sports vehicles. They want to continue to research and develop innovative components, as well as develop innovative systems. Next slide. In terms of PVG growth, they feel like they want to increase their penetration in both the truck and SUV, off-road UTV and ATV vehicles. They want to grow penetration in upfitting and also their street performance vehicles, as well as RVs. And they also see additional opportunities for growth in military markets, as well as commercial vehicles. Next slide. Looking at the stock selection guides, you can see It's a really pretty picture in terms of up, straight, and parallel. If you look on the far right, you can see what the annual rates in terms of value line, in terms of future growth for the next 3 to 5 years is 13% for sales and 17% for earnings. Next slide. Looking at the price earnings history, the PEs have been relatively high, but currently we have a PE ratio still it's slightly below what the average PE ratio was of 26.4. Next slide. When we look in terms of evaluating risk and reward, we come up with a high PE of 30 and a low PE of 21. And for some reason, I must say I did have difficulty in terms of trying to match it with the high price and low price for value line, but mine's a little bit more conservative. And so I still came up with a buy recommendation with an upside downside ratio of 6.8 to 1. Next slide. So what we're looking at then with an upside downside ratio of 6.8 to 1, we're looking for a projected total return of around 17.1% using the high PE of 21% return. And so next slide. One thing that I looked at very closely was to look at the high PEs with this particular company, because if you notice in the PEs, they've been relatively high. But looking at the PEs compared to the industry, FOXF's PE tends to be a little bit higher than those in the other ratio, to the peers. But also, if you compare it to the industry and peers tend to be rising just like Fox Factory. So at this point, it doesn't seem to be too far out of line, even though it does appear to be decreasing. Next slide.
2 minutes, Armida.
FOXF is a medium-sized, fast-growing company. It's a well-managed company. It's on sell, trading near its 5-year average low PE. It's a buy up to $150.20 with a 17.1% total return and a 6.8 to 1 upside downside ratio on the SSG. It's a worthy candidate to purchase or watch. Thank you.
Thank you, Armida. Very nice. And like I said, I like the way you have your conclusion in the color codes. It looks really nice.
Thank you.
All right, next we're going to look at 2 stocks through plus, and the first one up will be the undervalued feature, and Marilee Hardesty from MCMC will lead us through that one. So Marilee, it's over to you.
Well, thank you so much, Kevin. I'm pleased to present FedEx tonight. I'm with the DC chapter, Montgomery Investment Club, and it was selected as its undervalued stock in the most recent March issue of Better Investing. Next slide, please. As you can see, it's a comprehensive article on pages 25 to 27. Much of the presentation tonight comes from this excellent article. Next slide, please. So what is an undervalued stock? The Better Investing Editorial Advisory and Securities Review Committee selected FedEx because the stock's valuation may represent an opportunity. The undervalued company goal aims to increase 20% total return within 18 to 24 months. At the time of the selection, the price of FedEx was $188.74. Next, please. A little bit of background about FedEx. The last fiscal year ends May 31st, last year, 22. The industry is integrated freight and logistics in the industrial sector. It's a large cap company, which means that it has over 10 billion in sales. And with a large cap company, you anticipate a minimum of a growth rate between 5 and 7%. The company was founded in 1971 by Fred Smith, who now serves as the executive chairman. And the new CEO and president is Rajesh Subramanian. He's 56, and he took over last summer, July 22. However, he joined FedEx in 1991. The company went public in 1978, and its most recent very large acquisition was TNT Express in 2016, and this company has enhanced FedEx's presence in Europe. FedEx is a leading international provider of package delivery, e-commerce, and related services, and the company's business segments are FedEx Express, FedEx Ground, FedEx Freight, and FedEx Services. The company has approximately 700 aircraft, over 82,000 motorized vehicles, and nearly 550,000 employees. FedEx is the 16th most admired company in the world, according to Fortune. It has a long history of providing reliable and cost-effective logistics services and a strong reputation for providing exceptional customer service. The shares are a component of the S&P 500. Next slide, please. So how does FedEx make money? FedEx Express is the largest express transportation company in the world, with 15 hubs connecting 462 airport facilities with 2,253 stations, delivering to more than 220 countries and territories. FedEx Ground is North America's second largest ground package shipper, provides small package ground delivery services and less time-sensitive business to consumer packages in the United States and Canada. FedEx Freight provides less than truckload freight services across all lengths of haul to businesses and residences in North America. CEO Raj Subramaniam believes 90% of FedEx's future revenue growth will come from e-commerce. FedEx has been investing in its critical network of infrastructure to position itself to benefit from a multi-year growth in e-commerce. And lastly, FedEx Services offers sales, marketing, information technology, communications, customer service, technical support, billing, and collection services. The company acquired Kinko's in 2004. Next slide, please. The chart shows fiscal year 2022 revenue by percentage. Total revenue was $93.5 billion. Of that, FedEx Express was 49% of the total. FedEx Ground was 35% of the total. FedEx Freight was 10% of the total, and the other 5% of the total. Next slide, please. Dividend growth is historically very strong with FedEx, as you can see in this chart. The right side of this slide shows the long-term dividend history of FedEx. In June 22, the dividend increased 53% from 75 cents per share to $1.15. Dividend investing is an important strategy among many investors who want to generate a steady stream of passive income, especially when there is an increase in market volatility and forecasts of a possible recession. Next slide, please.
5 minutes, Marilee, 5 minutes.
Thank you. FedEx reported a disappointing fiscal first quarter in September with an earnings miss, resulting in the share price declining 22%. In response, management announced Drive, a comprehensive program to improve the company's long-term profitability through structural cost savings. The company plans to cut $4 billion by the fiscal year 25. $1 billion is being cut in fiscal 23. Savings will come from reducing both international and U.S. domestic routes, fuel surcharges to hedge against changes in fuel prices, cutting certain Sunday residential delivery service, reduction of officers and directors by more than 10%, 7.9 million share reductions in fiscal second quarter 23, and investing heavily in technology and increasing the dividend. Next slide, please. FedEx artificial intelligence model DataWorks has made the accuracy of delivery time better by reducing changes by 40%. FedEx Ground improved transit by 2 days compared to the prior year, and revenue rose 2%. Express improved 4% compared to fiscal 22. Freight's top line rose 8%. Flight hours were reduced by 12%. And FedEx opened a new ground facility in Italy. It is the only carrier in Europe offering a parcel and freight network. Next slide, please. FedEx's business model is cyclical, and its fortunes will rise and ebb with the global economy. 2021-22 were positive years for FedEx due to COVID. With the easing of the pandemic, the shift in consumer discretionary spending to services and away from goods has reduced demand for its shipping and delivery offerings. Competing cargo space on passenger jets has returned, and the competition with Amazon insourcing its own deliveries. There's also wage pressure and a tight labor market. Next slide, please. 3 of its competitors, probably the most well-known, UPS, Old Dominion Freight Line, and J.B. Hunt Transport Service. Next slide, please. I like to compare FedEx historic sales with the peer group average and the industry average, and you can see that it's greater. FedEx is greater than the peer group and industry average. Next slide, please. FedEx's historical earnings per share is slightly less than peer group average and the industry average. Next slide, please.
2 minutes, Marilee.
Thank you. FedEx pre-tax profit on sales, return on equity, and debt to capital are less than the peer group average and the industry average. Next slide, please. I use manifest investing. It gives the FedEx a quality rating of 88, a par, projected annual return of 16.5, and a CAPS rating of 4 stars, sales growth forecast of 7%, and a 5-year earnings per share forecast of $34.78. Next slide, please. The most recent value line was used to calculate the SSG earnings per share growth forecast of 13.5% using preferred procedure. Next slide, please. The graph shows a consistent upside in sales. The pre-tax profit and earnings per share dipped in 2018 and 19. Those years, earnings per share were impacted by the long-running TNT acquisition, which proved challenging because of the 2017 cyber attack and greater than anticipated investment requirements. Additionally, another temporary impact was the COVID-19 goodwill write-off due to temporary store closures and declining print revenue at FedEx Office. My growth forecast of 7% was selected by my research and also found in Value Line, Manifest Investing, Morningstar, and CFRA. As mentioned earlier, my earnings per share forecast of 13.5% was selected using the preferred procedure calculation, and the input came from the Value Line's projections 2026-28. Next slide, please.
1 minute, Marilee, 1 minute.
Thank you. FedEx's pre-tax profit on sales, return on equity, debt to capital are trending up. Next, please. Next slide, please. The closing price of my SSG report on February 22nd was $202.83. I removed the outlier years of 2018 to 19, as well as the percentage payout. The average PE ratio is 14.4, and the current PE ratio is very close at 15.9. Next slide, please. My judgment for the average high PE is 18.2 with a forecast high price of $436.40. My judgment for the average low PE is 10.6 with a forecasted low price of $134.90. This resulted in an upside down ratio of 3.4 to 1. And the closing price of $202.83 is in the buy zone with a potential price appreciation of 115.2%. Next, please. The compound annual return using the forecast high PE is 17.4%, and the forecast average PE is 12.3%. The relative value is 110.5%, indicating that the current PE is slightly above the average PE. The projected relative value of 97.5 is a more forward-looking review of the relative value. The PEG ratio of 1.0 shows FedEx is not overvalued. Next slide, please. And in conclusion, FedEx is a large, moderate growth company. It's a well-managed company. It's fully priced, trading at current PE of 15.9. Its forecast 4-year average high PE is 18.2. FedEx is a buy up to $210.30. The current price at the time of doing the SSG was $202.83. FedEx could be a candidate for purchase. Thank you very much.
Thank you, Marilee. Glad to have you with us.
Thank you.
And now, last but certainly not least, Bhaskar, over to you.
Good evening, all. Today, I'm going to talk about this Tecnoglass. It's a small company based in Barranquilla, Colombia, South America. I found this company through multiple places. I looked at in the BI ticker heat map, if you are familiar, and also in the predefined screen using the value. Next. So in the ticker map, if you go as of March 4th, yesterday, I saw this under the basic materials, Tecnoglass. It's under the basic materials, building materials. Just as a reference, the more green doesn't mean it's a buy. Many folks have done a study and it has turned out favorable, positive. Next. I also found it under the predefined screen, like I said, under the value. If you click, it will show up under the results of the value companies. This is a sales growth with 14.4% and earnings growth of 31.6%. The current PE is 13.7. Next. It also showed up in Manifest Investing under the best small companies in 2023, if you are familiar with Manifest Investing. It has a quality rating of 73 with a power of 10%. Next slide. So about Tecnoglass, this is a company which has two subsidiaries under that. It has the ES windows and it has the aluminum, which is manufacturing of glass materials for construction in large building, skyscraping building, and also they got into the residential single-family, multifamily sector recently in 2017. It's a leading producer of high-end windows. It is founded in 1983, but it went public in 2013. Next slide. So it has more information. It is one of the it is the largest glass fabricator, which is they focus more on, even though they are based in the South America, they are focusing more on the US market. They have about 96%, more than 90% the revenues generated from the US. And they have more than 1,000 global customers as well, but majority are coming from Southeast US. Next slide. So Tecnoglass, Illusions, and ES Windows. These are some of the products that they have. And Illusions is basically aluminum mixed frames, glasses, which they use it for the high-rise building and also in designing complicated buildings, glass requirements. That ES Windows is one of the suppliers, leading suppliers. They acquired this company to expand its market in the US. They acquired this in 2016 for a $13 million cash. Next slide. So the year closed in 2022, and they had a very good year. There was a lot of growth in revenues and earnings, coming up to 44.2 year over year with the US growth. And it's, as it says, it is sales by geography. It gets majority of the sales are from US market, and also the multifamily, commercial, and the single family residential is their main target. It started expanding exponentially beginning 2017 when they opened it up for the residential market. So the cash flow also, operating cash flow also increased to 141.9 million, and they have a very good debt to capital ratio, which is indicating they are heading in the right direction with the management point of view. Next slide. So this tells how their backlog has been increasing, and a lot of the revenues are generated, and they are able to expand, and they wanted to expand it across the US and not just Southeast. So the majority of the growth will be driven from the expansion, basically. Next slide. So this tells about during the pandemic, the repair and remodel exposure, which they call it, as many of them started doing their home project, and it was a good timing. They opened it up, and because of the repair and remodel, their revenue started increasing, and the residential sales were up 59% and 73% year over year, respectively. So this is another driving factor on how the small company, which is less than $1 billion sales, is expanding exponentially. Next slide. So this is a comparison between 2022 and 2021. When at the end of Q4 21, they had about 131 million. But after that, the contributions came from the US single-family residential and the multi-family commercial. The same thing happened in 2022, where the closing as of December 2022, they had a significant growth of 716 million revenue. Next slide. So getting into the SSG, I enabled the cash flow, which is the purple line, just to show that the cash flow has significantly increased more recently. And in 2016-17, there is a drop in pre-tax and sales. The pre-tax and earnings, it's mainly because of the acquisition ES Windows. After that, it started going high. In 2017, like I said, they opened the residential market, and the R&R, which they call it, has an effect on the overall pre-tax profit and the earnings. The price indicator shows as of March 3rd, it is $42.56, which is the highest in the 52-week high. It is at its high priced now. Next slide. going into the section 2, the fundamentals of the company data, it has been growing, especially if you look at the most recent 5 years. This has been growing consistently, and the most recent closing was 717 million with a 14% growth. Historical earnings per share had a big rise in 2022 with a 3.28 from 1.43, which is significant. And my projections for the sales is 10%. I came up with that just based on some data points that they gave on their website. They were saying by 2023 they would get into 790 to 830 million. And this is a small company. Growth should be up at least to a 12%, but I wanted it to be, because there are not many, another reference point is not many analysts are covering the stock. So if you go to Value Line or CFRA or Morningstar, there is not much coverage, but CFRA gives us as a strong buy. And the Value Line, if you look at this company, it is falling above the line, which is maybe it looks like a slightly overpriced, overly valued. And Morningstar is rating a fair value of $44.56. The current price is $41. So it is according to Morningstar. But based on all this, I am projecting a 10% growth in sales and the earnings per share of 7%, which comes to 4.60. On the management side, all the three areas, pre-tax profit, return on equity, and debt to capital are showing green, which means it is in the right direction. Management is a well-managed company. Debt is there. It is because of the acquisitions, but it's being a small company, I would go, it should be okay with that. But it is in the downward trend as of the most recent years. Next slide.
3 minutes, Bhaskar, 3 minutes.
Thank you. So this PE ratios, the current PE, like I said, it is 13. I had to remove some outliers, which is very high on the payout under the PEs. The current PE is 13 and the average PE is 11.4 after removing that. But if you play around with this, you will get different numbers, but you do your own judgments and study. But based on mine, it is coming as average PE as 11.4 and 13. Next slide. So on the last section, I gave a high PE estimate of 20, which is high, I know, but it's a small company, and I see that there is a potential to grow based on, again, it is depending on the industrial residential market. Using 20 as a high PE and a low PE, I used 7. My high and low price comes to between 23 and 92. As of today, it is 41.6. This is on March 3rd. It is $42.60. It is falling under the whole zone with an upside downside ratio of 2.5 to 1. There is a total return of high PE of 23, but still I would put it on hold. Mainly because of the uncertainty or less especially in the residential market that they are focusing. My upside downside of 3 to 1 with a 15%. If I wanted to get, I should have the price to go below 40. I would say it should be in the 30s to even consider a buy. Next slide. So to conclude, it's TGL's Tecnoglass is a small-sized quality company, and it is a growing company. It's fairly well managed so far based on the numbers, and it is trading below the average 5-year PE, but currently it is at the price is at its 52-week high. It is a buy up to 40, but I would consider going below 30, and below 40 is like in the 35s. It could be a buy if it is on the if the price is reasonable. But for now, I would hold and watch. Thank you.
All right. Thank you, Bhaskar. All right, so we went through all of these slides really, really quickly and the like. So what we'll do is we'll do a recap. So if we can go on to the next slide. And what we'll do is we sort of like to, again, make sure to download those handouts and make sure to do that. And we'll just sort of go through a recap. I may be a little bit behind you. I may have some buffering thing. I'm seeing slide 113, and I think we should be up. I want to move us.
Yeah, we're on 115.
Yeah, okay. All right, then great. Then I'm having a buffering problem here. All right, so yeah, we are on 115. So what we want to do is we want to be able to go to all of our panelists and ask them why they selected those locations. And let's go first with you, Jonathan. Why did you pick that location for RH?
Okay, I think RH has a lot of runway of growth ahead of them. They're creating this new niche market. They have a very strong vision for or plan for the future, which is fantastic. They're creating a new market with these immersive type experiences with their hotels, residences, restaurants, travel and vacation services. They've already recognized that this has been very disruptive to the industry and very lucrative for them. So I say that because of this vision that they have, this long-term vision, and I think there's a long runway of growth ahead of them. So I said that they're probably in the mid portion of the explosive growth phase at this point.
Okay, thank you. Armida, why did you pick that location for Fox Factory? Armida, make sure to unmute yourself.
Thank you. I was saying that I believe that this company still has a lot of growth in it, and they've been able to show the growth in terms of their sales despite the economic conditions that have existed for the last 3 or 4 years. They still continue to do well. They seem to be able to have developed a very exclusive clientele that they're looking to continue to grow. And my feelings are, as long as this particular area of sports continues to grow, there's a lot of growth still baked into this particular company.
Okay. And Marilee, why did you pick that location for FedEx?
Well, FedEx, of course, is a mature growth company. It's also a well-managed, admired, and quality company. And as mentioned, it has implemented a 5-year plan to increase its long-term profitability. It has already benefited the company. When it was selected as the undervalued company, it was at $188. Today, it closed at $210. Its long history of increasing its dividend is especially well received as a safe harbor during market volatility. The seasoned company with new innovations, such as its artificial intelligence models, DataWorks, which reduces delivery time, and its increased use of electric vehicles.
Very good. Okay. Bhaskar, tell us why you have Tecnoglass in that location.
So it is a small company. It has most recent 10-year data hasn't stabilized, especially the most recent 5 years has been significantly going in the same pattern, up straight and parallel. And they are changing their business model, and they are focusing on expansion. So there is a lot of room for them to come up with innovative ideas. So it is in the initial stages. Moreover, it is currently under less than $1 billion sales. There is more to come, and they are depending, and they are planning to expand it across the country and maybe across the globe. So it is still in the initial stages. There is more to come.
Thank you. Okay, so we've been talking for over an hour. Now it's time for you to talk by voting for which one you like. So let's go to our next slide. And then Cheryl, once we get over there, if you can put up the poll and let people vote. So go ahead, you get to vote once and only once. Okay, things are moving along pretty quickly here. Oh, we got a pretty close race here. We're up to 82%. Let's see if we can get up a little bit higher. One more vote, maybe. I think that's it. We might as well go ahead and close it. And there it is. So you can see in a pretty close race, we don't have to be precise, but Fox Factory held off FedEx. But that's both of those would be good. Again, we're always recommending that you do this just for to do more research to take a look at it. And now we can go to the next slide. And are there any questions that we see in the audience? I don't know, Kent, if you were able to do that while you were also keeping time in anything, or Cheryl, do you see any questions in the question box? Or people can raise their hands?
Myself here, and then go to the questions.
Yeah, there was one question there. And well, actually, I guess we got multiple questions.
Yeah, there was one question from Rebecca that was asking. I replied to her privately, but she was asking about the Money Matters Book Club. That do we have to read the book in advance? And the answer is no. It helps, but just to be able to answer your stuff. But even if you haven't read the book, please come to it. And again, it's online.
Each book is sponsored by an individual, and they do a very good job of doing an outline that people can easily follow during the discussion. So that's not a problem.
Okay.
Yeah.
Anyone want to raise their hand or ask any questions?
So Robert, you have a really in-depth question here. If you wanted to raise your hand and kind of shorten it down a little bit so that some of our folks could answer it, that would be great. This is about Fox Holdings, I think.
Oh, geez.
Yeah, and he's muted by the organizers. So let me I unmuted.
Get over there. Yeah, okay.
Go ahead, Robert. You're unmuted.
Okay. Yeah, I stated the same information 3 times, so I apologize for didn't see that it went through until I looked at it again and saw that it was 4 times. I got rid of one of them. Basically, the Q4 earnings report and annual earnings report, February 23rd. The company projected, my own estimates for background, I personally own Fox Factory. I have convinced my investment club to own it. I follow it for myself and for the investment club. And I've been waiting for that Q4 for a couple of months. And what I noted was that they flattening out the growth in sales or revenue for fiscal year 23 to about 6.25% versus my SSG is 13%, just as the one presented tonight. And then the earnings, quite a long range on the wide range on the earnings, but it flattens out also. So what's going on? And they said, well, I expected that the powered vehicle group would do a lot better with a new manufacturing facility in Georgia, and it did. But then they had to give some back from the sport group, and the reasons they talked about seasonality. I've never heard that term before. I presume they mean it's winter in the United States, and people are not out riding their bikes. So, that's the first time I've heard that from them. And then they talked about channels, and I'm not sure what that means. So actually, I'm looking for a discussion about from anybody about what the earnings report means. It looks like to me like it's flattened out, and at least for 23. And
Okay, well, how about if we have Armida answer us, since she's the presenter of Fox Factory. Armida, you have any response here?
I don't have much input on that. Matter of fact, I did download the fourth quarter report, but I didn't really see much response in terms of estimates for the coming year or the coming quarter. So I really don't have much input on that. I'll continue to look because I like this stock, as you do.
And
but
seasonality,
yeah,
can you answer that?
But in terms of, I was going to say, in terms of seasonality, I think part of it has to do with the fact that it has to do with, in terms of when, being that these are sports, I think it has to do with when certain sports are occurring, not whether it's fall or spring or summer. Since most the majority of the people who use these particular products are professional athletes, so I think that probably has more to do with it than anything else.
Okay. Okay. Yeah, what I sent you, I put it in quotation marks with what the president said
Mm-hmm.
or wrote. I'm sorry, in the quarterly earnings report, what management wrote. So it's easy enough to find. And the discussion wasn't, with the analysts wasn't, didn't provide much insight.
No, I agree.
So,
and also in terms of, if you go to the website and look at what the management had to write, it really wasn't that extensive, and I think it's because they just reported fourth quarter. What was it, mid-February?
yeah.
And so I think they still probably need some time to actually analyze the data themselves.
Yeah. Well, I'm going to just take that same question and just send it back to their investor relations department and ask a bunch of questions. I don't know what I'll get back, but
Robert,
okay, thank you.
What's the name of your club, and where are you located?
Regency Investment Club in Haymarket, Virginia. Cheryl has been there twice to visit us.
Yeah.
And I think we're trying to get you back out there again, right?
Yes. And
Yeah.
I was trying to look you up on the my list of clubs and didn't find you in there. So I got to call into headquarters to find out why you're not listed, since you are definitely.
Oh, I don't know. I was president last year, so I should have been. I should be. Yeah, there's a 20. What were you at now? 22 members.
Very good.
Yeah.
How long has your club been around?
Since 2008, and I've been a member since 2011. And our meetings are very spirited. There's lots of questioning and maybe even a little shouting going on. I like to say I'm looking for blood on the floor. This is our money, and Sometimes it bothers me to be questioned as thoroughly as I get questioned, but it's a good thing.
Very good. Well, glad to have you, Robert, and thanks for the question. Any other
Okay.
questions that we see there, Cheryl or Kent? Do you see any other?
No. The only other one I saw was Rebecca saying that she had seen where Money Matters was on the website. So we hope that she joins us for the next book reading.
Okay.
Later this.
Well, let's. So there are contact information for either the digging into the BI or for the 2 chapters. And there's a picture of some of us from Bink in Dallas last summer. So anyway, let's go to our next slide. And this is how you can sign up to receive the notices for this. It goes through the DC regional chapter, and you can fill in. The only notices you'll get will be for educational events. Sometimes the model clubs will have some announcements, but the book club, as well as this digging into BI, are the things that we tend to focus on the most. So please sign up. Next slide.
All righty. So if you are interested in better investing, make sure that you pass this information on to folks who might be interested in the digging into the BI event.
And here are the, if we go to slide,
Sorry.
bounce around.
And
Go ahead.
Sorry, Kevin. Yeah, I hit the wrong button here. And as Kevin mentioned earlier, volunteering is what makes this particular event run. And so both the Maryland and the DC chapters are all run by volunteers. These are some of the benefits you get if you decide to come and be a chapter volunteer. So keep that in mind. And next slide.
And so upcoming, here are the things that we're going to be looking at in April. Lululemon is the stock to study, and Walgreens Boots Alliance is the undervalued feature. And then the other 2 stocks are going to be ones that come from the April issue is always a top 100, but they have the top 200. And we're going to look at a couple of the stocks that are new to the top 200 as perhaps maybe being ones that are percolating and ready to go up. So we'll have 2 presenters work on that. So please come and join us on April 3rd at 7 o'clock for the April edition of it. And let's go to our next slide. And here are the dashboards that we have up on Manifest. You do not have to be a subscriber to Manifest. These are public dashboards. But there are the list of all the different ones we have. Mark is working on being able to have them a little bit better organized, but it depends on when his programmer can work on that. But if we go to the next slide, and again, if you download these handouts, you'll be able to see a link to some of the other slides. There we are on 123. If you download these, you can basically click on any of those, and those hyperlinks will take you directly there to do it. And again, you do not need to be a member of Manifest to a subscriber to get it. That's on the free part of it. So go ahead and take a look at those, and you can sort of see how all these stocks have presented. Like Marilee was pointing out that when FedEx was the undervalued feature, I think you said it was what, Marilee, 188, 189, and now it's 210. So it may have already met that 20% goal that quickly.
Yes.
So
Yeah.
Another reason for whether you're a member or not to be able to look at those stocks when they come out 6 weeks earlier and see if that's something that you want to do it. But it's going to require you to do some of your own research. Let's go to our next slide. And thanks for being here. One last look. Do we have any more questions or any hands raised? If not, up here on the top is, again, another link to the YouTube page, and hopefully we'll have that up either late tonight or early tomorrow so that you can be able to take a look at it. But again, make sure to go into the control panel and download those handouts. But any other questions? Cheryl, Kent, you see anything?
No.
Patrick
But
shared
go ahead.
some information about seasonality and what that meant, and also gave a really good link there. So I sent that out to everybody, and I'm hoping everybody got the information, can see that response that I sent out to Patrick, that I also sent out to everybody. So hopefully everybody sees that link. I
Okay.
hope.
And also, I just want to say that please try to download these handouts, because you can't do it once it goes onto YouTube. However, if you do miss out on it, just send a email to the contact list, and we'll get the handouts to you.
Very, very good. Anyway, thank you very much for attending, and we're glad to have you, and we'll see you next month when we dig into the BI again. Good night, all.
Thank
Good
you,
night.
Kevin. Thank you, Cheryl.
Hopefully, GoToMeeting will go smoother.
This is Vermeet, a couple things. I was going to say that you might want to change the life cycle slide. It had T. Rowe Price on the top of it.
Oh no, it says that because that's where that life cycle came from. It was, the quotation comes from his stuff. So when we use that image, that's because he wrote on it. He's the one who created that.
Okay, got it.
And that's where that quotation comes from. He wrote it in a series of articles that went to Barron's Magazine in 1939.
Got it. It's just when I'd seen it in the book. What is it?
Take Stock, and also in the digital handbook. Yeah.
Exactly. I hadn't seen that. Okay, good enough.
Yeah, and it's interesting. I was thinking of doing something like I was thinking of doing a class on how the SSG became the SSG, because we talk about the rule of 5, and they talked about that on Manifest. That comes from I'm looking at the book right now, Investing for a Successful Future. That was written in '59. That was the Babsons that did it.
Okay.
And I'm doing the book for the Intelligent Investor in, I think, May, and in there I basically found the reason why we have 5 years of the PEs in Section 3, because Mark Robertson always talks about how the original SSG did not have any PE ratios on there, and based on reading of Ralph Seeger's stuff and seeing that book and who gave it, I think that's probably how it came about. It was approved in the early 50s at one of the banks back then. So I think looking at all of these things and figuring out why we added this at this time and did that, and what the rationale was, because, again, like relative value and PEG and stuff like that, we haven't used before, just like we added PAR in Toolkit probably in the mid 2000s.
Right. Thank you. The other thing was my address is still my personal address in the on the slide for Promoter Club.
Yeah, I that was just a screen capture from there, so we'll work on getting that changed.
Sounds good.
Anyway,
and I did not see the link that Jonathan sent out on seasonality. Now I looked it up and saw, they found a definition in terms of what it means in terms of business, but I didn't see the link. Was it in the chat?
That's what he said. It was in the chat, but I'm not seeing it.
Not in the chat. You have to go into the questions. Chat is something different. I get confused on that too.
All righty. Thank you.
Yeah.
All right. Thank you.
And I happened to go to a book sale and found the Beardstown Ladies book.
Oh, wow. Okay.
So I'm looking through that.
That was, I was talking with the people when I was doing my prep session. I'll be presenting at Virtual Bink. And so I was doing a prep session with a couple people, and I told them, yeah, I found out about this because my mom was dating someone who was an AAII, and gave her the Beardstown Lady and the Better Investing Manual from like '94. So I read it at when I was home at Christmas, talked to my girlfriend at the time, and that's how we started our club. So it had to be the Christmas of 2000 because we started in 2001.
Mm-hmm.
Yeah. All right. You never know what our paths are going to be.
Exactly.
All right, everybody. Thank you and good night.
Good night, all.
All right. Good night.